never can you sell a house 6 months later and make money. Like
Yeah.
you're supposed to lose money if you got to move that quick.
Right.
Yeah,
Especially if you
like
put money into it.
Yeah, like you're supposed to lose like 20 grand. I mean,
Yeah.
on closing costs and commissions and all
Yeah.
this stuff. But yeah, I mean, I would imagine you could sell your house at a massive profit right now already.
But that's and the
Where
tough
are you
thing is
gonna
I
go?
don't want to because I'm gonna have to overpay for someone else.
What's up? Dave Toupin, thanks for coming, man.
Yo.
We're excited. This is actually called the Real Estate Podcast. We appreciate your time and pretty easy going, man. We try to engage with entrepreneurs, real estate professionals, try to have an open conversation. Anything goes. You know, we prefer for it to not be as much interview style, but just something that we would want to watch. You moved here from Michigan 2 years ago to Leander, doing a lot of cool things on the real estate side, and so we appreciate your time. And if it's cool with you, man, we'd love to just jump in and kind of start off with a little bit about yourself, kind of what you did growing up, and we'll just ask questions along the way.
Sweet. Yeah. Thanks for having me, guys. So I feel like I'm probably similar to you guys in a lot of ways. I'm a real estate junkie.
Yep.
I'm 25. I started trying to get into investing when I was 19, and I did a couple wholesale deals.
Nice.
Quickly realized that I really wanted to do multifamily apartments. I read Rich Dad, Poor Dad like a lot of people, and I got the bug.
For real estate or apartments?
For real estate in general. And then I always knew I wanted to do apartments, but I was like, I didn't have any money. You know, I was a broke college kid like most people. And so I thought that I really had to go through and spend years building up a single family portfolio and flipping or whatever to get into the bigger stuff. And then, you know, I just had talked to a couple people that had raised capital to buy deals. And I figured, well, why don't I just try that out? And so my junior year of college, I went out and started looking for deals, started underwriting, getting familiar with the number side of things. And I bought a 12-unit apartment complex, raised some capital from a couple investors, self-managed it, and then a year and a half later kind of flipped it, made them some money, and just kind of kept doing that over and over again the past 5 years. So bought just under 1,000 apartments since then, and now do some new development, and I have a software company as well.
That's great. What was it that got you interested in real estate? Did you grow up entrepreneurial, always trying to make money, or what kind of was that shift to say real estate is my new passion?
Yeah, definitely. I was an entrepreneur. My first business, I was 13. I started just mowing all the lawns in my neighborhood and started a landscaping company from that. Stopped doing that when I went to college, but yeah, I never really liked working for other people. I'd rather kind of work on my own time, my own schedule. And I like creating things, so I like how you can build a company from nothing and involve other people and build a team. And I just love that aspect of it. And it's a lot of fun. So.
Yeah, heck yeah. So then you kind of had that entrepreneurial mindset, trying to make money, building. And what can you remember, like the first time you were turned on to real estate in a sense? Was it Rich Dad, Poor Dad?
Yeah, I don't know, like when it was, first happened. I think I just had met a couple of people. I had an uncle that invested in some real estate, and I saw that growing up. And then, I met some people, I think through high school, that had talked about it. And then the biggest thing for me was, and this is back in like 2015, 2016, when podcasts were just really starting to kind of blow up. Somebody told me about Bigger Pockets, and I got on and listened to that. And then that's what led me to Rich Dad, Poor Dad.
Nice.
And, the whole thing just kind of snowballs from there.
Dude, so. Bigger Pockets, man. I remember because I started when I was 17, and like if you had questions and you typed it in on Google, the only answer was on Bigger Pockets.
Yeah, it was all in Bigger Pockets.
I was like, and then you're like, this is amazing. Yeah. Every answer's on here.
Yeah.
And nothing existed outside of that.
Nothing.
In my opinion.
Yeah.
So that's great, man. Same kind of thing. I started, my mom was investing in real estate, so it got me turned on to it, but ran into Bigger Pockets and like my mind was blown.
Yeah.
Yeah.
It was the same thing for you. You probably read that book, Rich Dad, Poor
Yeah,
Dad.
I think I was lucky because, you know, my mom, I've talked about this many times, but single mom, ended up buying like, you know, 2-3 houses a year for a long period. And
That's
so
awesome.
I was early on, before Rich Dad Poor Dad, I was just like fascinated with the concept of owning real estate.
Yeah.
And then I read Rich Dad Poor Dad, and I think subconsciously the biggest thing that stuck out to me was having the multiple streams of revenue.
Oh, yeah.
And that's, I think, what led to a lot of what we have now with the construction.
Now you got like 4 or 5, right?
Yeah.
I mean, that's crazy.
Yeah, so I never even really thought of it until recently, because I didn't necessarily plan for all of this to happen. It just happened.
Yeah.
And I definitely think there was something subconsciously from Rich Dad Poor Dad that led me to think that way.
I'm sure. Yeah. And your mom, I mean, that's dope growing up. Like, how old were you when?
So I was like probably 13 when she started buying.
She put you to work too?
Yeah,
Hell
we were
that's
working
awesome.
on the houses with the guy that runs all of our maintenance right now.
Yeah, that's sweet.
And she sacrificed a lot. So that was the thing, is what I saw
Hustler.
For me. Yeah, the power of real estate. And I still don't know how she did this, because it was literally, she raised my brother and myself, had a full-time job, and bought a lot of real estate.
That's insane.
And I asked her, and she's like, it's kind of a blur. Like, I don't really, she's like, I was just surviving. And I've got 2 kids right now and a wife, and it's hard to do that.
Yeah, it's hard to do
just
that. Dude,
yeah,
your mom's amazing. That's
she's
incredible.
and she's kind of like a second mom to Alex too, in a lot of ways.
Super cool.
Yeah.
Wow.
So
good people.
But anyways, man, like, you've obviously accomplished a lot in real estate, and that first deal that you did, what was that process like? Were you kind of relying on the investors to be like, yeah, this is a good deal, let's make it happen, and then you just said, I'll do whatever I can to manage it and run it and make sure it's successful?
Yeah, I mean, imagine going into something where you have no track record, no experience, and you just get punched in the face.
Yeah.
And then you get back up and you get punched in the face again.
Yeah.
And then you get back up. And honestly, it was just a learning experience for me. I didn't personally make a ton of money on the deal. I had like an acquisition fee on the front end that was like $20,000.
Yeah.
But I didn't raise enough money for the renovations, so I had to put that back in. So it was like my first big paycheck ever.
Oh.
I had to put it back in the deal.
You just were like, I didn't prepare for this. I want to make this right and keep this deal going.
Exactly. Yeah. And you know, so the split with the investors was that, you know, they put up $200,000, and I had a guy come and sign on the loan with me. I gave them 8% preferred return on their money, and then 80% of anything over that, which is really attractive for the investors, obviously. And I took 20%, which is kind of like my little sweat equity for putting the deal together. And so, I just was like dedicated to, I really, whatever it took, I needed to get them the returns I told them I was going to get them. So I self-managed it for like a cheaper rate. I was in there painting units so that I could hit their, you know, distribution numbers and
save on the maintenance.
Yeah, exactly. So it's like whatever it takes, you know, and it, you know, ended up being a good deal. I got them like a 17% annualized return after we sold it. So it was, you know, it was a good return for them, and it allowed me to take that, and then my next deal I had a track record, right? Now I've done this before. I'm, you know, in the process of doing it, so it just made it easier and easier over time.
What was the process of finding that deal? Was it a long time coming? Walk us through like how you came about that.
Yeah, I just went really hard for 3-4 months before I got that under contract, just meeting with brokers, local brokers, and I was cold calling owners. But that one happened to be from just a local boutique multifamily brokerage. They just list apartments, normally stuff like under 100 units. And so they should hit the market, and you know, the area was decent. It was like a C+ area, and I ran the numbers on it, and I was like, I can make this work. Like, well, this will be a decent deal, and we'll have some cash flow from it, and I'll be able to sell it for more. And so, I ended up just kind of working out through an offer, negotiated a little bit back and forth, settled on, I think I paid like $550 for it or something like that. A lot cheaper than what you'd buy it in Austin, that's for sure.
Yeah.
Same probably be $2 million in Austin. But.
Were you making money, or did you have a job while you were going to school and before this first deal?
No, I didn't. I saved. So I did a couple internships in college before I went into full-time real estate. I took a semester off and I worked in investment banking. I did, you know, so I was making actually decent money. I was making like $30 an hour, plus I was working 80 hours a week overtime, because investment banking, they just work the shit out of you. Mm-hmm. And so, so I'd saved up like $5-10 grand from that. And I basically moved back home. I was living in my fraternity house. left all my friends, moved back home. I said, I can't be around this environment anymore. I need to focus if I want to succeed here. And so I moved back home with my parents, had a little bit of money saved up, lived off of that while I was grinding to find a deal. And I'm like, I just need to close that first deal.
Yeah, that's right, man. I was wondering if you had the earnest money to put up for that deal, or if you had to borrow that too.
No, I had to borrow that too. Yeah, so the guy that signed on the loan put the earnest money up as well.
Gotcha, okay.
Yeah. So it was a little bit, thinking back, like there's a lot of risk there, but
yeah, it's fun to think back.
Man.
It's fun to get back into that zone and remember what it's like. And, it's like when you're saying getting punched in the face, it's like, for probably you and me, and I know Alex, like when we're going out and we're starting something new and trying something out, like I kind of want to get punched in the face. And I kind of want to get punched again. Like, dude, let's just get it out of the way.
It's seriously, it's fun. That's when, it's like that. Anytime you start something new, you have to expect some failure.
Yeah.
That's the only way you're going to.
Might as well just get it over with, right?
Yeah, just go out there and learn. I mean, it's the best way.
Yeah.
Now you know exactly what not to do again.
Exactly. So.
I will never, not ask for enough money for renovations ever again, right?
There you go. Exactly. I learned that, and I'm like, man, now every deal I raise a lot of extra money, and because I can always give it back, right? We could always just hold it in the account, and then when we sell the property, give it back, and it makes the returns better. But I'd rather have more than have to ever go back and ask for money. So I've never had to go back to investors for more capital, which is great.
It's a great lesson learned.
Yeah.
So do you remember when you first closed on that to, on the acquisition side, and opposed to when you sold it? Like, do you remember the like when you bought it, were you celebrating? Were you pumped up, or were you just like, I got to get to work? Can you remember that?
Yeah, I don't think I celebrated at all because right after, so I bought that 12 unit a week after I went under contract on the first 12 unit. I went under contract on another 12 units. So not only did I was doing my first deal, I was doing a second deal at the same time, which probably made it even more difficult on myself. But then right when I closed on those, like a month later, I went under contract on a 96 unit building. So I was just like growth mode. Dude. Yeah. I was like, there's nothing to stop. I'm like, that's awesome. No time to waste.
And it was the same. Was it? Did you feel like you had these investors that you could go do this, or were you trying to take these down and then go get the investors?
So I probably should have spent a little bit more time like raising money up front and getting people lined up, but I didn't. So when I got under contract, it was like, okay, let's go get the money. So it's like write a list down of everyone I know that has money. Okay, well, I'm not going to family, and so it's like I've got to just figure out all these people I've networked with over the years and then hit them up. And then, you just get a bunch of people. That's what I'm saying. You get punched, right? Because you just get a bunch of people that say no, or you get people that say yes that don't ever end up committing and investing.
Yeah.
And, I raised $400,000 between those first two deals, and it was not easy. It was tough.
Yeah, I can imagine.
It was a grind.
Yeah. How long of time frame did you have to try and make that happen?
Like 45 days. We closed within 60 days, so I had like 45. I might have extended that actually. So we might have had 60 days to raise the money and get it in.
How'd you learn? Because I'm not super familiar with this side. I know there's a lot to it, but on the raising the capital, paying it out, doing the accounting, did someone teach you that? Did you just jump in and figure it out?
I've had mentors along the way. So I had like my third deal that I did. I had a guy who owned about 3,000 apartments. He signed on the loan for me and brought some money to the deal. And then, I had at that point networked a lot in the industry and joined a mastermind with about 20 other apartment investors that most of them syndicated like I do. And so, I'd met people and picked up a lot of little things, but to me, it's pretty simple. I mean, you have to get you set up an LLC, we get an operating agreement made. And if I'm going out and raising money from a lot of people and doing a syndication, we get what's called a PPM,
right,
private placement memorandum. And so, and then we have to follow some SEC guidelines right around raising capital. But those are kind of structure the investment. And then for me, it's really just whatever the deal can support up front. I'll kind of tell investors going in like, hey, I don't expect to give you a distribution within the first 6 months, but after that, every quarter, we plan to distribute cash flow, and we're going to sell it in 3 years and get your money back plus projected another 40% return or whatever, right? So it just kind of, every deal is a little different, but to me, it's just there's just another system and process to it,
Sure. Would you say that you're more of a process numbers type skill set guy, or lean towards finding the deals? Alex and I kind of divide and conquer, where he runs the business. He counts the money.
Operations.
Yeah, operations. But it seems like you were playing both roles at one time. But do you kind of gravitate towards one or the other?
Yeah, I feel like I've always had a little bit of both because I'm super analytical. Like I can be in Excel all day running numbers and spreadsheets and stuff. But then also at the same time, I love raising money and networking with like bankers and lenders and I love, like, my favorite thing in the business is hunting down deals and getting them to close. Mm-hmm. And my least favorite thing is management. I do not like managing properties. So
who does like managing?
Yeah, you're right. Who does like it? Nobody likes it. But is a thankless business. Appreciate our managers for sure. But yeah, I definitely feel like I play a lot of different roles, from analytical operations to I kind of act as the CFO of our company currently, I'd say.
Yeah, that's a good hybrid skill set to have, because I feel like a lot of people are one or the other.
One or the other, yeah.
But if you like both and you're good at both, that's a double
win. I'm a little bit lucky.
Great syndicator.
Or something, yeah. So
that's awesome, man. So tell us about coming to Austin, and I guess what you're currently working on, because it's so competitive here. Finding those deals, I don't know, how easy, or obviously it was a challenge.
Yeah.
But here it seems like it would be a lot harder.
Yeah.
Because it's small and there's just a lot of demand. Like,
it is.
Walk us through what brought you to Texas and kind of where you're at with what you have going on.
Yeah. So I met a guy. I bought about 120 apartments at the time. And I met a guy through a mastermind that owned a big portfolio here in Texas named Gonzalez. And he owned about 4,000 apartments from Dallas-Fort Worth down to San Antonio.
As a syndicator or?
Mostly syndication,
got it.
yeah. And he worked, he had private equity, JV partners, stuff like that. But just a variety of different deal types, but all apartments. And really good guy. And so I met him, and he had kind of become a mentor a little bit. And over the course of a year, I think this is in like 2017 to 2018, we had talked more and more, and he was selling off most of his portfolio. And he's like, hey, I kind of want to grow this back up again. We got along well. And so he actually came to me and tried to hire me to help him out on the transaction side of a deal in Houston that he was looking at. And I was like, well, to be honest, I'm not really for hire, but I'd love to partner with you. And he was like vastly more experienced than me. He's twice my age. But he liked that, and we ended up partnering on that deal, and we did really well on it. And we're like, man, this is cool. This is fun working together. You're a good dude. I like working with you. We're like, why don't we start a business together? And then he asked, he's like, do you want to move down to Austin? And I was living up in Metro Detroit, Michigan at the time. I'm like, dude, Texas sounds fun. And he's like, I got a boat and you can use it whenever you want. I'm like, dude, where do I sign? I'm in. So
got you with the old boat clothes.
Yeah, I got my boat clothes. So so I moved down in when was this now? This is 2019, May of 2019. I've been here almost 2 years.
Sweet, man.
Love it.
Yeah, it's great.
Did you graduate from college, or did you get those first deals and you're like, I'm done?
I tried to drop out, but I was so close to finishing. So I finished. I got a finance degree.
Nice.
Barely.
Okay. I was just curious.
Yeah.
And then,
I don't think in hindsight, I definitely didn't need it, but.
Right. And so you moved down here to Austin, and is that the software company that you were talking about that you partnered with him on?
No, so me and him own Obsidian Capital. It's our real estate company. So we've bought probably since we partnered, me and him, another 600-700 units. All over Texas. We do, Dallas, Fort Worth, Houston, San Antonio, and here in Austin.
Only Texas?
I own outside of that partnership. I own a deal in Atlanta, and then I've bought some stuff back in Michigan. Those are more like JV deals. But me and him mainly in Texas. Yeah.
Got it. And is he from Texas?
No, he's from California, and then he lived in Washington, Utah, and then he moved here. He's been here for about 11 years now.
Got it.
But he's got an interesting story. He started in his early 20s working in apartments as a maintenance man.
Nice.
So he was fixing toilets and then started leasing apartments, then was the manager, and then was the regional manager, and then was president of the management company. and then bought a $300 million portfolio of apartments over the past 10 years. And so he's got this just
cool.
rags to riches kind of thing. And he's a
Yeah.
really humble dude, good guy. And so been just an awesome partner and mentor for me.
That's great.
Yeah.
A great background to have.
Yeah.
Probably about as good as it gets.
As good as it gets.
Yeah.
Right.
You know, and it's amplified what I've been able to do, because now I'm able to combine our track record, and he's able to help me qualify for these big loans. And so when we do these deals, like I'm out, hustling for these loans, and he's got all these relationships. So it's just kind of a good partnership. And I have one more partner on that business, Mike Woodfield. He does all of our asset management. So it's 3 of us.
So you do in-house asset management, and he outsources to
And then we outsource
whoever,
to third-party property management. Yeah.
Nice. So I guess that kind of makes. I was going to ask how you divide the roles, but I think I kind of get it. You're kind of bringing it in,
Yep.
and then
Hand it off. at
he'll help
closing.
out,
Yeah.
where he can, and then
Yep.
asset. That's awesome.
Yep. And then Glenn kind of bridges the gap. He's probably going to retire in the next couple of years. He's done really well in the last decade, and he's kind of handing. Me and Mike will take over the company.
That's
The
awesome.
next couple of years, and yeah.
How do you find ways to kind of look at this partnership and keep everyone happy? Like, what do you guys do internally to make sure you're just on the same page, feeling good, moving forward all the time?
Yeah, I always say this because I had the first couple deals I bought, I had a partner that was not so great, and partnerships are tough. I've never been married, but I've heard married people say it's like a marriage, and I can only imagine it. It kind of is, right? And you're dealing with large dollar amounts, money going in and out. People get weird when it comes to money, and so you really need to partner with people that, when not only are good when things are going well, but when things go bad can maintain composure and have good character. And I think when it comes down to it, like partnering with people that have integrity and good values that match yours is the number one thing. And if they don't have that, you're never going to make decisions that make the other person happy, right? If I have certain values and their values disagree, which is what happened in my first partnership, certain decisions are made that are just not, that
aligned.
just don't align, and it just it's never going to work. And so you have to have good values. And then I think the next thing is just communication. Like anything, you gotta communicate, right? Hey, like I'm using the company card to buy this, or I'm just communicating with people, keeping in touch, and then people don't get weird about anything.
Yeah, totally agree, man. Yeah, it's interesting because we're all about partnerships, and I agree with everything you said. But it is like a marriage, and sometimes you feel like you gotta jump into these things because there's an opportunity. But sometimes you'd have to date for 8 months, and so it's trying to find that balance.
So right.
Because how do you a lot of times the reality is you might not experience these bad things with your partners to know how they would operate until it actually happens.
And then you're like, shit.
Yeah,
they're
damn, I really messed up on this one.
And they're hitting the road, and it's like, oh man, But that's why we did that deal in Houston first, and we kind of dated, right? And you figure out like, is this gonna work or not?
You can figure out pretty quickly whether you're
Yep, I agree.
And your intuition will tell you. I mean, your gut will tell you if this is gonna work out or not.
Yep. What's the cool thing is like, being an entrepreneur, you don't have like a set boss or a manager or certain people you got to work with, and I get to pick and choose who I work with. And if I don't like somebody, I don't need anybody, right? I don't need to work with anybody. I pick and choose who I work with, and I choose to work with good people who have good values and who I know aren't going to screw me over, or investors, or right. And I think I sleep like a baby because of it.
That's great.
Because I've been through the bad ones.
Sure.
So,
Yeah, we both have as well.
I'm sure you have too. Yeah.
Yeah, absolutely.
I'd much rather miss out on maybe $1 million opportunity and not enjoy the person I'm working with. I'd much rather miss out on that $1 million and pass on it, as opposed to my life not being able to sleep at night, like
exactly,
you're talking about.
Dude. Amen, man. I think the same way.
And the beautiful thing is, on the flip side, like when you do it right, it can be amazing. When you have people that divide and conquer, and are accomplishing things when you may be sleeping is a really cool concept.
And you get to have fun, and we'll go out on the lake together, we'll go hunting together, like just we all get along and team.
How many times do you take that boat out on your own?
Oh, a bunch, all the time. And the first thing
you said I got the boat, I got
it. The first thing I did when I moved here too is I bought some jet skis because I just love being on the lake. It's like my favorite thing. So.
Yeah, jet skis are unreal. Every time I get on one, man.
Oh,
my wife's parents have one out in Spicewood.
Oh, nice.
But yeah, dude, that's awesome. Well, welcome to Texas, man.
Thank you.
I know you've been here for a little bit.
No, it's fun. Yeah. I love it here.
So y'all are buying apartments around what size? Is there like a minimum y'all won't go below?
I have said for a while, like I really do focus 100+ units because the scale makes it a lot. Believe it or not, it's easy, for me. It's easier to manage a 150 unit property than it is to manage a 20 unit property.
And why is that? Just scale in what sense?
The on-site management team. So once we hit 100 units, we'll have a leasing office, and I can hire a full-time on-site manager / leasing agent and a full-time maintenance person.
Yep.
And so we're not having to get a request for maintenance, call someone in, and we're not having to like have the leasing agent bounce around to different properties. Like they're there full-time on salary. And they're taking care of things. And so then I hire a third-party management company who just they hire those people. They oversee them. And then I just babysit the management company.
Yep.
Or in my company's case, Mike does that now, right? And so under 100 units, under 90 units is different.
I know it firsthand. Like we've bought little 20s and managed them ourselves. And because of exactly what you said, I think there's some opportunity there. And there's a little niche of like, there's a lot of people that don't want to buy them, and there's definitely a lot of people that don't want to manage them.
Yes.
And so if you can get in there and you have management in place and you do want to manage them, you can capture some value.
Yep.
But you're right. I mean, we primarily manage single-family homes, and single-family homes to a 20-unit apartment complex to a 100-unit, it's like 3 completely separate businesses.
It is, yeah.
And you're right. I mean, if you get that scale, you have full-time people, whereas with the 20, you got to hope your property manager drives over there and looks at it once a week.
Exactly. They have to be there 100%. And, it just, I learned that because I bought those 212 units, and then the 96 unit building I lived in, and I oversaw it. I hired a manager and a maintenance guy, and the manager quit on me, and I was in the office leasing units and like doing all the bills and everything. So like I've been in the positions, and so, I've kind of gotten to see that, but it's always just been easier when we can have a team on site. Now, not to say that I don't buy some smart stuff, because this past year I bought 48 units. There's 4 buildings, a 20, 2 10s, and an 8 up in Michigan. And I still have a management company there, which is nice. And then here in Austin, actually today, we just signed a contract on a 40 unit just north of Austin, downtown.
I think I know the deal.
Maybe. Which one?
Is it
duplexes?
No,
it's north of the Triangle. Sorry, it's not just north of downtown. It's north of the Triangle.
I was thinking there's one out.
It's on Cameron.
I think it's called Retina, something like that. It's a 40-unit apartment complex.
Maybe I need to buy another deal.
I'll send it to you.
Send it to me, yeah. Which is the first property I've bought in Austin since I moved here. It's just it's hard to find good stuff, right? But
tell us about that one. Like, what are the numbers?
What are y'all looking for?
Yeah, so they're duplexes, and they're really big units. So they're like 11 to 1,200 square feet, and there's like nothing like that in this area. Surrounded by a bunch of office and industrial north of the Triangle there, and so it's right on the main road. It's a fenced community of duplexes with a pool, which is kind of nice on this little creek, and it's just mismanaged. These guys own I think they own a little over 1,000 units locally, all small buildings, and they self-manage, and it's just so they don't pay enough attention to individually to each property, and so the rents are like $1,200 on average when they should be. We're going to throw like $20,000 a unit into renovating them and up the rents to probably $1,600, $1,700 on average. Mm-hmm. We're going to do the whole modern contemporary thing, paint them white with black trim on the exterior, and, granite countertops, new black backsplashes, vanities, flooring, all that stuff. And so, our plan is kind of go in there, up the rents, bring the value from 5.5 million to 9 million.
Okay. How many units did you say it was?
About 40 units.
40 duplexes?
40 duplexes,
40
yeah.
duplexes. Got it.
And so based on some comps, there have been some other duplex projects that have sold from 185 to 225 a unit in the area.
Mm-hmm.
Yeah, just like really low cap rates. So I think what we're going to do is probably actually condo them off and sell them individually. I think we'll get more.
Yeah, absolutely.
If we can. So we're looking into that, but or we'll just hold it 5-10 years cash flow. And
how did you come across it?
cold calling the owner.
Nice.
Yeah, just picking up the phone, man.
Looked up who owns a lot of properties and called them.
Yeah, we use CoStar and just get a list, and I just start dialing. And I've got a couple guys that dial for me too, and we're always just digging up deals, you know.
It's the best way.
That's right.
Same way that you do it with single family. You know, I started wholesaling. You guys might send mailers, right? Or
we have before, yeah.
You have it before, yeah. So I do the same thing with apartments, and I've gotten a couple deals from that. So
nice, man.
Yeah.
And so y'all are looking for when you're taking down a deal, kind of, you know, what numbers are y'all buying them at typically?
The average like purchase price of the buildings we're buying is like 8 to 12 million, and we're raising anywhere from 2 to 5 million in capital.
Gotcha.
Yeah.
What's the vision for it's Obsidian Capital, right?
Obsidian, yep.
What's the vision for Obsidian moving forward?
I just want to buy a lot of properties. I want to buy 5 more this year, and I want to do start 2 new developments each year going forward, at least. So
have you done a new development yet?
We broke ground on my first one about 4 months ago. 50 units out in Leander. It's like a mile and a half from my house, which is nice.
Yeah.
And then we're planning a 150 unit, potentially 200 unit up in Liberty Hill right now as well.
Sweet. Would you sell it? You build it and sell it, or?
We're gonna build it and hold it.
Yeah.
The 50 unit and the other one. Yeah.
When you're looking at development versus buying existing, I mean, obviously you found it cheaper to build it in Leander, right?
It is, yeah. Land's definitely cheaper. You like compared to Austin? You mean?
Yeah, like, you know, after everything you put into building the apartment complex, would it have been cheaper to just buy an existing 50 unit?
Well, so that's the interesting thing. Normally, yes, in most markets. With Austin, I've just realized that it's so opposite. It's like the stuff that's built in the 70s and 80s, I can build for the same price that those are selling for, you know, that are 30, 40 years old. And so when I saw that, and my business partner Glenn noticed that too, we're like, dude, people are buying these C-class buildings for 120 to 160 a door. And we're building all in for about 140,000 a unit, and we'll have a brand new property.
Mm-hmm.
We're like, man, this makes sense. So we might as well build.
Nice.
And so we picked up a little 3.5 acres in Leander and put that together about started a year and a half ago, and it took a year for us to muddle our way. You know, we're new to it. So
yeah, and I've seen some of the videos. I've seen some of the videos you posted.
Yeah. So,
did you have to go through rezoning or anything with that one?
That one was already zoned multifamily, which is good.
Nice.
But the one I'm doing now, the 150 unit, it needs to be rezoned. So we're kind of going through that process right now.
Where's that one at?
Liberty Hill.
Liberty Hill. So obviously, I mean, you live over there, but that area is growing, you know, a lot right now. Yeah.
It's like 12 to 15% population growth every year.
I think Leander is the fastest growing city in Texas, isn't it?
I've seen it on that list. Yeah. I've seen, you know, there's always a bunch of different lists, but it's been on a couple of those where it's like top few. Yeah, for sure.
Leander's great. Cedar Park's blowing up.
Oh yeah.
I mean, is that why y'all decided to go? Obviously, it's, you know, you're right down the road. You're probably looking at land all the time. Or?
Yeah, I mean, honestly, I don't think there's a bunch of calculation that went into it. It was just like we found the piece of land, it was zoned, and we're like, dude, we'll take it. You know, we just bought it cash, and we, you know, and then we put it together, and yeah, it just made sense.
How long is it taking y'all to build the 50 units?
That'll be like 13, 14 months, start to finish, and we broke ground in October, I think.
Nice.
So yeah,
I live in an apartment complex over off of Shoreline and Mopac.
Okay.
And they're building a new one right next to it, and I've been watching the development process, you know, as they go through it.
Nice.
And you know, after they got the concrete poured and all the utilities in place and everything,
went up quick, huh?
fast,
dude. Like
really,
2 weeks or
really
3 weeks,
fast.
they just go up.
Each day I drive by, I'm like, damn, how they're getting that.
Yeah.
That shit up
It's
fast.
the same thing. It takes like a long time to get, you know, utilities lined up and foundation and electrical and all that stuff. But then like once they go frame it, man, it's quick. Those framers, they freaking get in, get out.
Yeah.
It's crazy.
They're working overnight or something, man. Because
they have to be. They have to be. It's nuts. They, unless they do like, I've heard people doing like modular stuff. Have you heard of that?
A little bit. I've actually heard of that more in like Detroit area from investors that were in
Really?
Detroit.
Okay.
But I can't remember what they're building, like modular apartments and like stacking these things together.
I have heard of that too.
Yeah.
Some of my buddies are doing some builds out there, and they're telling me about that. And yeah, it's interesting, like prefabbing like units and stacking them.
Yeah,
it's like nuts.
yeah, and they're like they look to be really cool and unique, and something that like, you know, people in Austin would love.
No,
you know?
I'm sure. Yeah, I wonder if that'll kind of get to scale. I'm sure at some point that's how they'll do most of them.
Maybe so.
They're building so many apartments nowadays, it's nuts. You know.
Yeah.
You're building them too.
I'm building them too. Yeah, I guess I am. Yeah,
that's exciting, man. So you like syndications to developing, and now it's like you can, you know, take down anything and create any kind of opportunities when you've kind of run the gamut like that.
Yeah, I think so. I think if you have the mindset where, you know, any project is doable, right? All it takes is, you know, a little bit of tenacity and funding, and you just got to figure out where you get the funding from. You could do any kind of project, you know.
Yeah.
You want to build a skyscraper, like,
yeah,
you got to get the land, and then you got to get the money.
Yeah, and I'm glad you said that, like about the tenacity, because you hit a level of success where you've got a lot of units, you're doing well, but you still gotta be cold calling to find these duplexes in Austin. Like no matter what, deals aren't gonna. I mean, sure, you're gonna get referrals and stuff, but you still got to go put in the same work that you did 5 years ago.
You guys watched the fight the other night?
I didn't. My brother was all into
Conor
it.
McGregor got knocked on his ass, man. He's been living the high life the past 6 months, and his opponent's been freaking working.
Yeah.
And so, hey, you know, you're only as good as your last at bat. And if you don't keep hustling every day, I mean, you're gonna fall behind.
Right. Absolutely, man. He shouldn't have messed with Khabib.
Yeah, no, he shouldn't have, dude.
My brother called that fight. My brother's like die hard.
Oh, really?
And he's like, dude,
MMA,
put all the money in the world on Khabib.
Wow.
And Khabib won in I think he won like 30 seconds or maybe even shorter than that.
That guy grew up wrestling bears.
I know.
You don't mess with a dude that does that.
Yeah.
Dude, I heard some stories, man, like, because I guess his religion, like the certain way that they fast and all this stuff, like he would fast and just work out, and like they play tackle basketball, like you just fucking tackle people. But they were saying like he was out working everybody, and he was fasting, and he hadn't slept, and he'll go swim in these rivers, like he swims against the current, and it's like, I mean,
just like unbelievable.
Yeah,
stuff.
you know,
it's like
wrestling bears after lunch.
Yeah,
I certainly wouldn't. So.
Yeah, that's crazy. I did not know that.
Oh yeah, man, I heard it on some podcast, nuts. And I was like, that's next
that guy
next
is
level.
An animal, dude. Literally.
Well, and that's the way you got to do it, right? You gotta keep fighting and keep pushing. You know, same thing like you were talking about the first 3 deals. I mean, I guess, you know, we're always in growth mode as well, and it's hard to celebrate after something happens, right? Because it's almost like it's gone. I don't even care about it anymore. You know, we accomplished the goal. It's like, all right, what's next?
Yep.
And you just got to keep pushing forward.
Yep. Yeah, you do a little bit of both. I mean, definitely celebrate your wins. I mean, this year I've definitely like traveled more, and you know, like I haven't been doing 90-hour weeks every week. I've been more like, okay, let me think long term, you know. And so, but you know, still you gotta just grind, and I think I realized that like it's really about the team, especially with my software company. You know, it's really like it takes a team to do anything, and so I'm really investing a lot into like people nowadays, and finding like the right people that I can help them achieve their goals, but then also they can help me explode my companies, right?
Yeah.
So
I'd love to talk about the software company and learn what you created there.
Yeah. So around the multifamily stuff, I told you I was like an Excel nerd. I built this spreadsheet that I use to underwrite the deals. You guys probably have various, you know, calculators that you use for flipping homes or whatever, wholesaling, right? You know, I built the spreadsheet that helps you financially model out when you buy apartments, what price to pay and what your returns will be, and what your renovation budget is. And so it's all like this well-built spreadsheet, and it's like a very fluid model. And I started selling it 2 years ago. I don't really like intend to do that, but some people were like, hey, I like your model, can I buy it from you? And I was like, oh, sure. So I put it on my website, and I ended up selling $100,000 worth of the spreadsheet in like a year and a half. That's
crazy. You're like, all right.
I was like, okay, like
scalable.
What? And so I just been thinking about it for a while, and I'm like, man, I really need to I need to make this better. There's a way that this can be even better, faster, help investors that maybe aren't good with Excel be able to underwrite deals. And so I wanted to build a web-based platform around it and have it do not only that analysis side of things, but also help manage like your deal pipeline and a database of all the deals you've looked at in the past and send offers through this. And so it's called Real Estate Lab. And we're spending about $500,000 building out this first round, or this first MVP, kind of like a beta, and then we'll grow it from there. But yeah, it'll launch in the next couple months, probably April, May. We'll launch the beta, and from start to finish, it'll help you underwrite a deal. You can upload the property's financials, rent roll into T12. It'll read the rent roll in the T12, pull out the key data, like the unit mix and everything, put it into the analyzer, and then you're just going to pick a couple of assumptions, like your operating expenses going forward, your rents, your financing structure, and all that, and then it'll pump out all the projections in real time as you're making these assumptions.
That's really cool.
Yeah, and so the goal is just to make it easier and faster for people to underwrite deals.
Right.
And then it'll create like a financial package for the deal, automatically print it out in a PDF. You could send it to people, kind of, to like investors or whatever. Mm-hmm. And then you can create LOIs through there. You just punch in your purchase price, your time frames, and your terms and stuff, and it'll create a custom LOI, send it out for you. So, a lot of different little features to help specifically for apartment investors.
How do you go about the process of spending $500,000 and, feeling like that's going to work out? Like, how do you kind of understand, like, hey, this makes sense?
Oh, well, because 2 years ago I spent $60,000 with a really bad company and I got a really junk product.
Yeah.
And so as another thing, I failed, and then I went back to the drawing board, and I learned that it's not as simple as just hiring just any development company to build a product, right? They've got to be the right team. So I went to the drawing board, talked to a bunch of software people I knew, interviewed like a dozen top developers around the country, and I picked probably the more expensive one. I didn't go with the cheapest one because everyone was telling me, like, dude, whatever people are telling you it's going to cost to build this, it's going to be double. Mm-hmm. And so I had a bunch of people like, yeah, we could build it for like $200,000, $250,000. They had like, these good teams, and they showed me some of their past projects. And I had this team out of San Diego. It's like, well, realistically, they gave me the super detailed proposal, like how many hours they plan to spend on like every facet of this thing. And they're like, it's probably going to be like $650,000. And I'm like, well, these guys probably know what they're talking about. I've seen some of their past projects. I've talked to some of their past clients, and they were really happy with their work on $1 million plus projects. I definitely can't spend $650,000, so let's work that down. But I met with them, and they were a really good team, and so I hired them a couple months ago. And what I really liked about them is they had a huge. I probably had a budget of like $30,000 just planning. And what I liked about that is, you go to the age-old adage, measure twice, cut once, right? Mm-hmm. And I figured if we spend a ton of time really planning this out up front, that's the right team. Sure. And so we spent over 2 months just planning out, and they would send me, they call them comps or wireframes for exactly how the site is going to look. And I would give them feedback, and then they'd go back and design them in these high def renderings of exactly every button, and mm-hmm. we'd plan out when you click this button, what page does it take you to, and when you click this, like the functionality of every little thing. And so for me, I just felt really good about working with them because of that. So,
and that's great, and I think it's an amazing idea, and we want to support it. I'm trying to understand, like, how do you know? You just have to take a massive risk to think like people are going to pay for this and it's going to bring a return, or do you have like some kind of guidance on other things you've looked at to where you feel pretty confident?
Yeah, it's kind of a unique product in the market. There are a couple other companies that have multifamily analysis tools. There's two, namely, that do that, where you can upload the rent roll on T12. It'll read them and pull out and give you some data around it, but you can't actually like underwrite the deal and create a financial model online. It like gives you certain data points, and they charge $500 to $600 a month, and they have anywhere from, I know between those two, I think they each have like 4,000 to 6,000 subscribers paying that. They're both $100 million companies owned by, I think one of them's owned by Berkadia. If you guys know Berkadia, a huge multifamily commercial brokerage.
Yeah.
And then there's another one that's a privately held company, but so I saw those, and I'm like, and I've started to hear people in the industry talking about those different software companies and products, and they're like, hey, I'm using this, or what do you think of this? And so, I figure if I can put my product out to do what they're doing and more, and I'm going to undercut them by like 2 or 3 times and charge like $200 a month.
Nice.
I think I can hopefully pull a couple thousand people.
Yeah. And then turn around and sell it to them.
Yeah, and then turn around and sell it to them for $100 million.
And I mean, he had, $100K off of an Excel spreadsheet, right?
Exactly. Yeah. That was kind of the proof too for me. It was like, okay, people are willing to pay. And then I also have a multifamily investor community that I run with about 120 members. And I think a lot of those people right up front will utilize it. So.
Right. That's awesome. Yeah, I was just trying to understand because that's a big investment.
It's a risk,
but hey, I'm all about it.
I got a couple people, like family and friends type people, that really have invested in a lot of my other deals and have made the money, and they believe in me. So I'm hoping to make them a lot of money.
Hell yeah, I love it, man. We'll help any way we can with it.
Yeah, I appreciate it.
Other than the tool and the opportunity, was there something specific about the software business model that attracted you? For me personally, I like the scalability of it, and once it's, I'm sure there's some maintenance, right? Like this company or somebody else is going to have to keep up on, or if something goes wrong or functionality stops working here and there. But you're not having to recreate a product every single time you have a customer, right?
Correct.
And so it's scalable, and
it's not a white label. It's you just go right online and you sign up, register, and then you've got an account right away. Yeah, so we don't have to create it. I don't have to have a huge back-end team. I did hire a CMO this year for that company, and I've got a content creator now, going really big on like social media stuff. And then I've got a sales guy. I'm about to bring on 2 more salespeople. And then I'll probably end up building a team out this year of 1 or 2 in-house developers. So
there you go.
We've got some in-place revenue already because I've got that community. I've got 120 people. It's $300 a month to join that community, and so we've got some good in-place revenue that really helps us get this thing up and rolling, which is nice. So we're not bleeding every month, which is good.
Yeah.
But yeah, it is. I mean, some of these are dicey going into it, and they raised $2-3 million like. From outside capital, and they're like bleeding every month just trying to get a certain valuation so they can go out and flip it. And I'm just trying to take a little bit more of an organic approach, put my own money into it, and keep it small,
Would your goal be to sell it?
I don't know. I like right now I'm really focused just on like creating a good product and making sure it works, right? It's got to work. And then bringing that to market and just kind of evolving it. And yeah, if in the next 5 years I get an insane offer, I'm definitely open to it.
Just like real estate, the right offer comes.
You never know.
Yeah.
But software companies do get huge multiples, and people pay really stupid prices for software companies.
Or even too, like say what was that large multifamily brokerage you were talking about? Berkadia, say there's another, company out there, or software out there like that. It was brought to our attention that companies will literally just buy you to cannibalize you and shut down the product.
To eliminate competition.
Yeah.
Yeah, they might say like, hey, here's $10 million. We see you have 500 users. Here's $10 million. Just go away.
Yeah.
Exactly.
Right? And then they inherit like my client base and so they will do that too.
Yeah.
But
just
we're not going to let it, man. I'm going to put them out of business.
All right, there you go.
Good, man. Well, that's exciting. I got to connect you with some guys at Sunroom that I know that are doing some cool things.
Oh, I've heard of Sunroom.
Yeah, I think.
Who do you know there?
The 2 guys, Ben and Zach, the founders.
I think I talked to Zach.
Yeah.
Kyle Marcotte?
Yeah.
He introduced me to one of the.
Did he?
It was Zach. Yeah. Cool dude.
Yeah, they're great.
It's been a while, but we had a conversation.
I'll reintroduce you if you want, but they sold their company to HEB. They started Favor.
That's right.
And then they started Sunroom, and it does leasing. And I don't know. I think they definitely are full-scale tech guys, but they also understand real estate.
Correct.
And you get the apartments, and they can help on the leasing, and so it could be a good.
I remember talking to Zach. Yeah, they did sell that company to HEB. Did really well, and so
it's pretty cool.
There's money in software, man. And Austin's like a tech town, isn't it? I mean,
it is now.
It's becoming a tech
welcome,
town.
Elon.
Yeah, welcome. Hey, Elon Musk. Dropbox CEO's moving here.
Yeah, people get salty about it, dude. Like, people are saying they're calling it Silicon Hills now.
So, is that what they're saying?
Yeah. But all these people are like, what the hell's up with that? Like,
yeah.
there ain't no Silicon Valley. And
It's
I'm
a
like,
small town.
just
Texas,
wait, baby, we're
ago.
coming.
Yeah, we're coming.
Yeah.
I don't know. And you guys were born and raised here, right? In Austin? So
I was born in Cleveland, but moved here when I was 3.
Oh,
so
you're a Midwest guy too, but it's when you're 3, yeah.
Yeah, so I don't know much about
Okay.
Cleveland, so
Yeah.
pretty much grew up here. He was born here. Andrew was born here.
So what's it? I mean, it's got to be crazy, right? 20 years. How old are you guys?
I'm 29.
26.
It's got to be crazy seeing over the past.
It's
15,
pretty
20
crazy,
years.
and it's weird, I guess, because you see differences, but you're kind of here the whole time, so it's not like boom all at once change. I guess I'm sure if
That's
you
true.
Yeah, and I feel like the crazier thing is to me, because I agree, it doesn't actually seem that crazy. Definitely changed a lot, but I think moving forward it's going to be that way. Like I feel
So you
as
still
if
feel like there's a lot of opportunity here.
Opportunity City.
All right, I like that,
Dude, I'm telling you,
because everyone
man.
comes in, it's like, man, it's too late. It's too late. I'm like, no, dude,
I don't think
you don't
so.
even realize what's about to happen here.
I have these. I tell people all the time, I'm drinking the Kool-Aid. I think this is the best market in the world. I think that jobs are going to continue to come. I have all kinds of predictions. Like I think the 200s, the 300s, the 400s, that's $200,000, $300,000, $400,000 houses, they're going to be gone in 5 years.
Yeah.
I don't think you're going to see them at all.
Yeah.
And there's
That'd
just
be
a
great.
massive influx of jobs, of people. Texas in general is attractive, and everyone knows Austin's the coolest place in Texas.
Yeah.
And it's still, as you say, it is expensive, but relative to where people are coming from, it's not.
You're right. Yeah.
So, like specifically right now, there's I think about 30 houses in all of Round Rock for sale, and you just list a house and pick your price. It's happening right now to my buddy. He bought a new build. Michael Meltzer bought a new build like 6 months ago for $250,000, and he just got a job in Seattle. He's going to Amazon, and I was like, dude, let's just list it at $330,000. I didn't even list it. I posted on Facebook. We got an offer right now, and he's
Full price.
Full price, and they're like, great. It's not going to come to the market. I don't have to compete with anyone. I'll take it. And there's just a massive demand.
Wow.
And I don't see it slowing down. I could be wrong. You don't
I
want to
agree
make
with you.
investment decisions to necessarily just bet on that happening. But if
the
we
amount of
look back,
jobs and people moving here, like,
I think
it's a safe bet.
Yeah, I think 10, 15, 20 years, easily double the size. That's my opinion. And I think this is just going to keep happening.
It'll be maybe the biggest metro.
Well, and it's not just Austin, right? You got Round Rock, Georgetown, Cedar Park, Leander. These are all just blowing up.
Dude, Liberty Hill, like when we were growing up,
Dude, that's
you
the
would
booties,
never
man.
straight up.
You're out there, bro.
We played football with some of those guys, and they have
The Panthers or whatever.
Yeah, they were like state champs a couple years in a row.
Really?
Yeah, but like nothing going on in Liberty Hill. Like you're talking about developing 150 apartment units.
In Liberty
That's
Hill.
great. Like I think it's
but
there.
it's absurd.
Yeah, I'm just saying
10
like
years ago.
how like Liberty Hill's probably gonna be a massive city one day.
Oh, and people are talking about like, man, do they have the demand? Like, and we're trying to go for a HUD loan, and HUD only, they look at a lot. Basically, the supply and demand is one of the most important things to them, right? And people are like, are they gonna do more than one HUD loan there? I'm like, dude, they're gonna build thousands of apartments just in Liberty Hill in the next couple of years. You see what happened in Leander?
Mm-hmm.
I mean, they've stopped building apartments because they're saying they've like built too many in Leander, but they're filling up like that. We were one of the last ones to get in the door.
Well, another thing too that I was thinking about is if the market continues to stay the way it is, 30 houses in Round Rock, nothing in Austin, and if you are making an offer in Austin, you're competing with 50 other people and it's going 100, 150 over asking.
Yep.
The 240 people, whatever the number is, that are moving here every day, they got to go somewhere.
Yeah, and there's only a couple hundred houses on the market total.
Where are they going to go? Probably your apartment.
Oh yeah, 100%. I mean, I just bought my first home. I've been renting and living in C-class apartments the last 5 years, but I just bought a home in August, and they listed it on a Tuesday for $615, and I saw it and I'm like, dude, this is a deal. Like that's below market. And I think they did that to move it quick because they had to buy their new home that they were moving into, right? And so they had 20 some offers within like 2-3 days, and I offered $662.5, so I was like $50K almost over ask. and I only beat the next guy by $3,000. I figured out after
662.5. You got to pick you
662.5.
can't go 660. Never do
man.
like 660,
Well, somebody was at
665.
659. I made a cash offer. I put like because I'm used to apartments, dude. Every apartment deal I buy, I put $100,000 non-refundable earnest money from day one on a lot of these deals because they're so competitive. So I put it I was like, I'll give you $40,000, $50,000 like earnest money, and I'll close cash in 60 days. And luckily I got it done. And then my neighbor's house is like the same model house, just sold for $800,000 a month and a half later.
Yeah.
And I know that's like maybe short term, like hyper. And
no, I think
in the market, but it's crazy.
Yeah, and that's what I was trying to get at with my friend is like, never can you sell a house 6 months later and make money. Like you're supposed to lose money if you got to move that quick.
Right.
Especially
if you put money into it.
Yeah, you're supposed to lose like 20 grand. I mean, on closing costs and commissions and all this stuff. But yeah, I mean, I would imagine you could sell your house at a massive profit right now already.
But that's and the
Where
tough
are you
thing is
gonna
I
go?
don't want to because I'm gonna have to overpay for something else.
Exactly. Yeah.
Right. I'm gonna have to go buy something else.
Unless you want to go back to the old days and go back to the C-class apartments and start living in.
I'm good. I'll change that.
I hear you, man. I hear you.
But I would if I had to. But yeah, it is interesting, right? And I, even from 6 months ago, you guys do a lot of the residential stuff, right? But even 6 months ago, it's changed a lot. The house
it's changed a lot since yesterday.
Yeah,
seriously.
I
mean, every day.
In the last 2-3 months has been like I've never seen it like this. This is like the time that everything's going nuts, and that's what he's saying. Like
market value today will increase by if you list your house today. Say you think it's at market, say $595. Tomorrow or by Friday, if you have 50 offers at $100K over asking, that's the new market value. So I mean it is changing like that.
I mean that's supply and demand, baby.
And you just got to be smart, obviously, on not getting carried away in the frenzy and having another Tulip Mania. You heard of
What's
that? Right? Dude, so it was the first bubble of all time. It's Tulip Mania. You should check it out.
Oh, the tulips.
When
it was like in England. It was I don't remember. It was like early
time ago.
And they just started going nuts on buying tulips. And tulips became this massive, rarity and people paying these high prices. And then all of a sudden this one tulip came out that no one ever seen. And they were bidding it up and then nobody bought it. Nobody paid what the price was. And all of a sudden they're like, it just crashed, dude. It was flowers. It was the first bubble.
And it's interesting because flowers die after 2 weeks anyways, right? And so it's like...
I don't understand it, but yeah.
You're not holding these as assets, but it tanks. So all these people probably went out and started making, millions of these flowers, and then they couldn't sell them.
You should check. You guys would both like it. To just look in Tulip Mania.
Tulip Mania. All right.
But yeah, I mean, just say that because we're long-term thinkers, and it's important to point out to the listeners, like you obviously, we can talk about how hot it is, and it is, but you can't make decisions guessing on things. You got to be smart and have some plans, like with everything that you're doing. And I'm sure you factor in all kinds of contingencies and reserves, and that's key, right? Because there will be a time, like it's not always going to be. Up.
It definitely doesn't always go.
Yeah, so you have to plan for that. Yep. So I just want to point that out.
Yeah. Well, and also too, probably what you love about multifamily and commercial is that your properties are cash flowing, right? And you're also controlling the value of them by increasing the cash flow, increasing the revenue. It's not necessarily what guy next to you sold his apartment complex for. It's how much income is your property producing.
Exactly. It's not just based on comps. It's based on it's based on the income. It's somewhat controllable, which is the cool thing about commercial,
Mm-hmm.
So I love it. It's a financial game.
Financial game, and we're in Opportunity City, baby.
Opportunity City. I love that.
Yeah, man.
That's awesome.
Well, hey, is there anything else that you want to talk about or bring up? Any ways that we or our listeners can add value for you? Just want to kind of throw that out there.
I'd just say, like, anyone that's interested in learning about apartments, I've got a really good community where I teach a lot of people and how to invest, how to get in the game. And, I put out a lot of free content on YouTube, stuff like that. And you can check me out on Instagram at Real Estate Jedi. And we'll like that.
Yeah, I like the name, man.
Star Wars fan, yeah.
Well, and then the software coming out, what is that going to be again?
It's called Real Estate Lab, and you can check out some early info at realestatelab.com.
Sweet, man. Well, we appreciate your time. We're here to help any way we can, and be excited to see you continue to grow. And once again, welcome to Texas. I know you've been here for a little bit, but it's exciting stuff, man. You're
Thanks.
finding success. You said you got your first deal. You know, that's not a new development, so
Yeah.
sky's the limit,
Excited.
man.
We're moving.
Yeah.
I appreciate it, guys. Thanks for having me.
Absolutely.
Opportunity City. Thank you.